Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, feeling a bit sick, gonna keep it simple here. We're gonna look at SPY, IWM QQQ XLF VIX, oil and natural gas. Continued sideways action here, and if we look at the hourly time frame on SPY and take off extended hours, we get this pattern which is very odd, but it's pretty much just consists of the bulls buying the dip 3 days in a row, lower open, and buy into the close. But there's the difference. Today we are not closing strong. We're closing a little weak with a little bit of notable volume at the end of the day. And that's a difference between Thursday and Friday. So we have the start of earnings season. Citigroup for the financial sector had earnings today. That was a catalyst for the financial sector bulls to have a great day, which we will look at in just a second. We have continued financial sector names reporting throughout the week. Netflix is the first tech name to report on Thursday. That's going to have a significant impact as well. And in the end, SPY had one of the lowest volume days that we've seen in months aside from holidays. And that, in my opinion, is the market pausing and waiting to get into the thick of the earnings this week. We've had this scenario where we're looking for healthy consolidation and we're just not getting any kind of meaningful pullback. And that's because we keep seeing one major factor, keeping the bulls propped up. So we're looking at oil, financial sector, and tech sector as some major players. Last week, we were seeing some consolidation in the sectors, but oil was staying strong. Today, we saw consolidation in the tech sector to start the morning, consolidation in oil, but the financial sector was all bull to start the day thanks to the catalyst of bulls buying the C reaction to Citigroup's earnings. So support in the short term is 255.50, and we held that level today on SPY. And key resistance remains up at 259.16. So a 4-day tight range that we're waiting for a break on, and at this point, it's anybody's game. We'll see if that bearish action at the end of the day carries over into tomorrow, but we would have to see the bears break 256.41 and 255.50 for it to be any kind of meaningful pullback on the daily time frame. Something that also stands out, IWM closing at the low of the day. IWM has been a bit of a lead bull on this move up. IWM is heavily weighted in the healthcare sector. Healthcare and biotechs are very significantly correlated, and healthcare is a significant percentage holding in the S&P 500 as well. So we're looking at, healthcare, biotechs, financial sector, and tech sector as the major players. But the fact that we're getting this pullback here is, again, maybe a clue into tomorrow. Support is 140-135, and then a lack of daily support after that level. But bears have to break that 140-135 level, because if they don't, the bulls are just fine and holding on in complete control. Hourly resistance on IWM, 143.44. Anything under that's just a lower high. SPY hourly resistance is 258.30. QQQ, so not a lot of event. Let's try that again. Not a very eventful day for QQQ. Support is down at 158.70. We did break it by 11 cents. The bulls did turn around momentum after weakness this morning, but we could see some profit taking. I would be surprised if we didn't see profit taking. We know the tech sector has seen a solid bounce like everybody else the last 3 weeks, and now we're heading into earnings. What's the risk to reward at this point? The bulls have already seen a bounce from the lows of the dump. We've seen a bounce of 12+%. The risk to reward favors the bears at this point, in my opinion, just because we have already seen that 12% bounce, and to anticipate that we're going to see a lot of bullish reactions to all these tech sector earnings and expect weekly continuation, I think that's a less likely scenario. I personally don't play earnings, too much of a gamble for me. I'm not a fundamental analyst, but I play reaction to earnings, and we're going to be watching what the sector does to Netflix. So hourly lower high on QQQ is 159.96, and we're watching the low of today as a key support. Again, pretty much a double bottom and a lack of support for about $1.50 if those two levels do break. So we have hourly lower highs set on every name that we've looked at so far. The question is, do we drop down and see a lower low with the bears breaking the lows of today for follow through? Financial sector, we had a quintuple top 5 days in a row in the 2450s. Finally, bulls broke that level on the back of C earnings, And we'll see if the rest of the financial sector bulls can have bullish earnings responses and guidance to look for continuation here. Most important support short term is 24.18 and resistance after 24.75. We're looking up at 25 and 25.22 as the next levels. So we'll see if the bulls can keep up this run on the financial sector. Short-term support is 24.61. That's our hourly higher low, and it did hold at the end of the day. And if that level breaks, then that's going to start to fade a bit on this bull move attempt. VIX continuing to struggle, and we have not changed the hourly trend. We know we're looking for an hourly trend change. We've seen the higher opens, just like SPY has seen the lower opens, but those higher opens in the morning just fade. There's no hourly trend changes, and the bears keep comfortable. So at this point, the bulls need to hold a higher low compared to 18.12. At this point, they're trying to do that with the low of 18.70, and they need to break $20 to see the hourly higher low and then that trend change. Again, it's worth keeping an eye on VIX and TVIX and all these names because we know it's just a matter of time before a daily bounce gets going, but there's no sign of it on the hourly time frame just yet. Oil continues to consolidate. Healthy consolidation, I would say we could pull back to 48 and the bulls would still be very healthy on this daily time frame. Again, we're looking for the weekly inverse head and shoulders pattern to potentially play out, where we have our resistance neckline, perhaps forming our lower high compared to that 54 level. And then we need a healthy weekly higher low. There's our left shoulder, head. If we start consolidating, there's our right shoulder, and then we'll need a bull break of the lower highs to change the weekly trend, which would be significant for the market as a whole. That's something we're keeping a close eye on this quarter. And again, at this point, healthy daily consolidation. When the hourly trend goes back to the bulls, then we know the daily higher low has been established. Right now, the range to be watching is 51.78 resistance and 50.41 as support. Double bottom at the low of the day today, essentially, and a tightening range to potentially be watching into tomorrow. If the bulls can follow through over 51 again, we'll have a bit of an hourly equilibrium, actually more of a descending triangle, but tightening range is the bottom line. Natural gas targets hit. Huge day for the bulls. So we were looking for the weekly bounce. That was the scenario and the time frame that we were entering the trade based off of. I have exited half of my UNG position at this point. The reason for my exit was at first we started the day and saying, great, significant follow through for the bulls, hourly, higher low. I said, all right, that's my stop for half my position. And then as we just continued to surge all day, it got to a point where I said, all right, this is, we've exceeded my initial target by 20 cents at this point. I'm just going to exit. If we lose the 5-minute uptrend, I'm going to leave half my position. So I exited half of my position in the low 350s when we lost the 5-minute uptrend. And here are the bulls back in full control, keeping the strength. We're extremely overbought. There are no bullish entries at this point. The 4-hour time frame needs to consolidate. Once we establish a 4-hour higher low, I will likely use that level as my stop. But the 4-hour RSI currently is up at 86. The hourly RSI currently is up at 82. Short-term support is 3586, followed by 3494. And the bulls are keeping up this momentum. At the end of the day here, after hours, we just hit a higher high with another hourly bull flag. So how about that shift in sentiment? And again, I'm not a fundamental trader. I didn't read any weather reports. I didn't read any inventory reports. It was just the weekly chart and the potential, or the weekly chart was really it. And then looking at the daily chart, and I was going to add if we saw another leg down. And now I'm just sitting on the position now that the move's following through. And at this point, we're going to be looking for a weekly lower high to be set somewhere. There's a ton of space where that weekly lower high could be set. Once we lose the daily uptrend, our weekly lower high will be set, but we still need a higher low and a higher high on this daily time frame to really confirm any kind of trend change. This bull move just came out of nowhere and it was really, really fast. So we'll be watching for the potential of a DGAS day trade tomorrow because of how overextended we are right now. But again, I'm going to ride my UNG half position until we lose the 4-hour uptrend. So I appreciate you watching. Hope you have a good night, and we'll see you tomorrow.